Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. The S&P 500 ended the day essentially flat after early volatility, reflecting investor caution ahead of next week's Fed meeting. The Dow gave up modest gains, while the Nasdaq outperformed. Buoyed by strength in tech and semiconductor stocks, investors remain focused on inflation data and central bank signals. Positioning should remain selective. Focus on sectors showing relative strength, especially tech and semiconductors, while maintaining caution around cyclical areas vulnerable to commodity swings. The latest jobs report showed stronger than expected wage growth, complicating the Fed's path on interest rates. Inflation remains sticky, and markets are pricing in a higher probability of another 25 basis points hike next week. This keeps risk sentiment in a cautious tone. Expect choppy trading until the Fed confirms its stance. Defensive sectors may outperform if hawkish surprises emerge, while growth sectors could rally if the Fed signals a pause later in the year. Technology led the gains today, driven by semiconductor stocks rallying on positive earnings and optimistic guidance. Communication services also outperformed, supported by strong demand for digital advertising and streaming services. Tech and semiconductors look positioned for continued strength near term, especially if inflation data cools. Investors should monitor earnings momentum and supply chain updates closely. Energy and materials lagged amid softer crude oil and metals prices, pressured by concerns over weaker global demand. These sectors continue to face headwinds from a slowing Chinese economy and elevated US interest rates. Caution is warranted in commodity-linked sectors. Consider reducing exposure until clearer signs of demand stabilization emerge or inflation dynamics shift. Nvidia rallied sharply after beating earnings estimates and raising guidance, fueled by strong demand in AI and data center segments. The stock broke key resistance levels and signals potential for further upside in the near term. Nvidia's momentum suggests it remains a market leader in growth tech. Exposure here could benefit from sustained AI investment trends, but watch for volatility around broader tech sell-offs. ExxonMobil shares fell as crude prices dipped and profit-taking intensified following recent gains. The energy giant faces near-term pressure from volatile oil markets and uncertain global demand forecasts. Energy stocks like ExxonMobil may remain under pressure until commodity prices stabilize. Avoid adding exposure ahead of clearer demand signals or geopolitical developments. Overall risk sentiment remains cautious, with investors balancing hawkish Fed expectations against pockets of strong corporate earnings. Volatility indices are elevated, signaling ongoing uncertainty in equity markets. Maintain balanced positioning with a tilt toward quality and growth sectors showing resilience. Avoid overexposure to cyclical or high beta names until volatility subsides. Geopolitical tensions remain a background risk, with ongoing trade concerns between the US and China, and uncertainty around European energy supply. These factors continue to weigh on commodities and global growth expectations. Global macro risks call for risk management discipline. Hedging strategies and diversified portfolios are prudent, as geopolitical events could trigger sudden market moves. Highest conviction setup, NVDA. Nvidia's leadership in AI and data centers positions it well for sustained growth amid secular tech trends. Strong earnings and raised guidance confirm robust demand and operational execution. Expect continued momentum driven by positive sentiment in tech and AI sectors. Shares are likely to test higher resistance levels, with volume supporting the move, barring broad market sell-offs. If this breaks, a sharp pullback below key support levels near $460 on weak volume or negative guidance from peers could undermine the bullish thesis. What happens next? Markets remain range-bound with tech holding leadership as investors await clear Fed direction. Inflation data and earnings reports will keep volatility elevated but contained. A hawkish Fed surprise or geopolitical escalation could trigger broader risk-off, pressuring cyclical sectors and dragging growth stocks lower. Tomorrow, watch Fed meeting outcomes and statements. Next, CPI inflation release. Earnings from major tech companies. US-China trade developments. Crude oil price movements. Volatility index trends. Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. Real wealth starts with discipline, health, and strong relationships. Take care of yourself. Take care of the people you love. Stay focused, keep learning, and stay informed. Until next time.